Good morning, ladies and gentlemen, and welcome to the PYX Resources Limited investor presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated in the right-hand corner of your screen. Simply click Q&A, scroll to the bottom, type your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard and you'll be notified once they're ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Oliver Hasler, Chairman and CEO of PYX Resources. Good morning.
Good morning, Mark, and thank you very much. Good morning, everyone. I am very happy to have this opportunity to present PYX Resources to you today. I will assume that you have all read the disclaimer. So what I'm presenting to you today is our mineral sands mining business. We have a very large producing mineral sands company. As a matter of fact, it's the second largest producing mineral sands company based on zircon resources. We did our original IPO on the National Stock Exchange of Australia on February last year, 2020. And we recently listed on the main market of the London Stock Exchange. That recently meaning that was the 15th of November. Not only do we have a very large tenement or very large zircon resource, we're also known for a very high quality. A very high quality in terms of assemblage value. We are, compared to most of our peers, we are a zircon mining company with byproducts of rutile and ilmenite, while most mineral sands companies in the world are ilmenite mining companies with byproducts of zircon and rutile. That makes a huge difference. Today, zircon is being sold at $2,400 per ton, while ilmenite is being sold around $350. And as a result of that, we have a very high assemblage value of $1,680 per ton, which is 3 to 5 times higher than the one of the rest of the publicly traded companies. And at the end of the day, this gives us a natural high margin, but also a very high quality resource because of our low radioactivity. We have less than 500 parts per million of uranium and thorium. We have a very low alumina content, and Kalimantan sands are known for their whiteness. As a result of this, we are used for the fused zirconia industry, which is the one that uses zircon for high-tech applications. High-tech applications like semiconductors, solar cells, batteries for electric vehicles, etc. Our project, since last year, we have focused on increasing our volumes. We have an incredible opportunity to reducing our costs. And in the second phase of our project, over the next 5 years, we intend to increase the capacity to 48,000 tons per year, which would put us as the fourth or fifth largest producer in the world, with EBITDA margins of around 60%. So we have a very large zircon deposit in central Kalimantan with a very high quality. And timing could not be better for our project. As you well know, there's a trade war between Australia and China, Australia being the largest producer and China the biggest consumer. We are in Kalimantan, Indonesia, which is a Belt and Road country, and with that a strategic ally of China. There is a lack of supply of zircon. This was predicted for a long time and delayed by 1 year because of the pandemic. But today there's not enough zircon for the actual demand. And as a result of that, prices are increasing. We have announced 4 price increases this year, increasing from last December, where we were selling at $1,316 per ton, to $2,400 per ton that we're selling today. So as I mentioned, there's a lack of zircon because because there's not enough resources. In addition, there's a trade war. Rio Tinto closed the largest zircon mine in the world in South Africa, Richards Bay. And the new projects coming along will probably not do anything else than to cover the lost capacity, since most of the known mines are reaching the end of their mine life and are being less productive. Over the last less than 2 years since we took control over the mine and did our initial public offering, we have focused on increasing the volume of the business. Last year, we increased the volumes by 37%. This year's by 14%. We have a very solid order book. We're totally booked until the end of the first quarter. And we have been working over the last year with zero inventories, just enough inventory to prepare for the next order. And this is with the actual demand, with China being fully on board. India, which is one of the largest consumers of zircon after China, still is in the middle of the pandemic, should increase the demand. And Europe is just starting. So I believe that this lack of supply will create more stress in the short and mid-term and continue putting stress on the prices. So over the last 2 years, we have exceeded our goals operationally by increasing our volumes, but strategically, we have reached our objectives by acquiring a second mine, which we did in February this year, which converted us into the second largest producing mineral sands company by zircon resources. And I believe we have a great potential of becoming the consolidator of the mineral sands mining business in Kalimantan, since we're the only industrial group present in that part of the world. Here you can see the different mines and mineral sands mining businesses by zircon resources. As you see, PYX Resources is number 4, but the other two, Aston and Sheffield, are not in production. That's why we're saying we're the second largest one in production. Which makes us very special, as you can see on the left bottom side, is our assemblage value at $1,680 per ton. And that's mainly because of the very high concentration of zircon. Our project is a low capex project, and I'll explain why. Our offices are in Palangkaraya, which is the capital city of Central Kalimantan, and was one of the prospects to become the new capital city of Indonesia. As a result of that, we have a new international airport, we have hospitals, we have hotels, but very important, we have government paved roads to our mineral separation plant and to Mandiri, our first tenement, and to Tisma, our second tenement, and also government paved roads all the way to high volume ports. One is Banjarmasin and the other one Sampit. These ports today are being used to export iron ore, coal, and palm oil. So they're high volume ports. So we don't have to invest in capex to build ports, roads, etc., which usually is a lion's share of the investments. Here you can see our zircon grade compared to our titanium oxide. So we're clear outlayer, with Mandiri having a zircon grade of 4.8% and Tisma, the second mine we acquired this year, at 3.3%. So you see, this is what creates the difference in assemblage value, as you can see on the next slide. So it's because of the high concentration of zircon that we have so much higher assemblage value, which at the end is a margin that we get from nature. Here you can see pictures of our tenement. On the top you see Mandiri. At the end you can see that our business is actually mining on the beach. The sand you see on the surface is already zircon. So at the end, we're mining directly in the sand. We have very little overburden, which reduces the cost of extraction. It's an environmentally friendly process. We don't use any chemicals in the entire process. It's mainly gravitational. So at the end, you separate the sand by gravitation, take the concentrate from the mine, transport it to the mineral separation plant, where again you separate through shaking tables or gravitational, you dry, and then you separate magnetic and electrostatically. On the top of the picture, you see the Kahayan River. That river connects the mine to the factory, and in the future we will use barges to transport the concentrate and reduce our transportation cost. On the bottom, and this is a producing mine, on the bottom you see the New Tisma tenement that we acquired, which is still not in production. On this slide you see our mineral separation plant. Very important, we have been in production since 2015, so we have been producing for 6 years. As you well know, half of the mining businesses, the listed mining businesses, are not in production. So we have been in production with an IUP license, which is the new generation of mining licenses in Indonesia, since 2015. Last year, we increased the capacity to 18,000 tons per year. And during the month of November, we increased another 6,000 tons to the factory. And the reason we did this expansion in the factory is the first 18,000 tons, we're focusing on the production of zircon. As you probably know, in Indonesia, you're not allowed to export concentrate. You're only allowed to export processed material. So all the material we export is at least 65.5 grade premium zircon. This year, we received the extraction and production license from the government for rutile and ilmenite, and we're waiting for the export license. So they reinstalled another 6,000 tons in order to start producing rutile and ilmenite, which we will start by selling into the local market. And once we receive the export license, which we hope early next year, we will start to export also the byproducts of our process. Since we're in production since 2016, we have blue chip customers all over the world. Pre-pandemic, we had a big part of our production going to the UK, Spain, France, and Germany. During the pandemic and after, we grew very strongly in China, but we also sell in Taiwan, in Japan, Indonesia, and India. Recently, we started exporting to Brazil as well. So what we want to make sure is that we have a clear diversification, both geographically and in the different industries, focusing mainly on high-tech industries, so fused zirconia that is willing to pay an additional price to receive zircon in these years where there's a lack of supply. Here you can see the chart of zircon supply versus the demand. So as you can see, this came as no surprise that this year there would be a lack of supply, just delayed by the pandemic. I believe that this lack of supply would be a very long cycle, and there's no new projects that show that could compensate for this lack of supply. And as I mentioned, as a result of that, we have increased the pricing 4 times. One of the very interesting parts of the zircon industry is that it's a highly concentrated industry. 72% of the global supply is in the hands of 5 main players, which are Iluka, Tronox, Rio Tinto, Tizir, and Kenmare. Some of them you might know. 4 of them are listed companies. And this high concentration brings a lot of discipline into the industry, especially discipline in the market. Zircon is a commodity. It goes up and down, but if you look at the last 16 years of pricing and cut through the commodity supercycle, you will see that it has had a continuous upper trend. We expected that to continue, but at $2,400 per ton, we have reached our projections for the year 2027. Here you can see the pricing of rutile and ilmenite. The same thing, these are both titanium oxide. so titanium feedstock. It is expected for rutile and ilmenite to have exactly the same trend like zircon, being that there will be a lack of supply in the future. Ilmenite right now is peaking again. During the year, it was selling at $250 per ton. Now it's selling at $450 per ton. As you probably know, the main applications for zircon are in the ceramic industry, in the foundry, refractory, and pigmentation industry. But the highest growth is found in the high-tech industry, where zircon is used for semiconductors, solar cells, parts for batteries for electric vehicles, catalysts, etc. So zircon is a critical mineral in the transition to clean energy. So we saw the high grade that we have of zircon. We saw the effect that has on the assemblage value. And as a result of that, we have a superior margin. Just to illustrate that, you can see here on the chart, I'll compare PYX resources to Iluka. Iluka is the market leader and sells and produces 50 times more than our company today. So if we look at the first column, that is the revenue per ton. But in reality, you should not take the revenue per ton on a given year, because most of the mining companies in the world, we do targeted mining. So we mine where there's the highest concentration and we can optimize our margins. What we should be taking is the average margin of the mine. So assuming that we are mining at an average grade. So you can see that at PYX, we still have a potential to increase. So we're mining today at lower grades than the average. And most of the other companies in the world would reduce as they have to mine in lower grades. So first is you have the revenue, then you have the costs. So you can see that most of our peers have production costs between $160 and $300 per ton. This is by them doing their own in-house mining. Our costs are still relatively high at $1,200 per ton. And that is because through legacy, we inherited third-party local contract miners that are relatively expensive. But we have a huge opportunity of being able to reduce our production cost, our extraction cost by at least $800 per ton by doing our own in-house mining. We're going through tests as we speak and should be doing our in-house mining towards next year. But even with our relatively lower volumes to our peers and relatively high costs, we have superior margins. And that is the result of our assemblage value. So this gives us a huge opportunity to increase those margins by increasing the volume. Scale matters in this industry, like in most of them, and reducing the costs. In the next slide, we'll talk about valuation. At the end, the valuation, it's an asset valuation. So depending on the amount, on one side, on how many resources do you have, how big is the mine, and then there's how much are those resources worth, so the assemblage value. So what we're doing here is we're mapping where the publicly traded mineral sands players are. On the Y-axis, we see the enterprise value divided by resources, so in US dollars per ton, so which is basically the market cap that the company has divided by the amount of resources. But then very important is those resources have which assemblage value. So obviously the price increases, the valuation of the company increases as the size of the resource increases and the assemblage value. So if we extrapolate through all the actual players, you can see that PYX still has a huge growth upside potential in increase of share price. There's two investment banks that follow us today, one in Hong Kong and one in London, and their short-term projections, which they define as share price over the next 12 to 18 months, are at $2.65 and $3.35. So we should more than double from where our share price stands today. Here you can see our share price performance since we started. So we have fourfolded the share price over the last less than 2 years. And with the acquisition of Tisma, we have sevenfolded our market cap. So our project has been very well received by the market. As I mentioned before, we're dual listed today. We have listed in the London Stock Exchange. I think this is very important to increase our visibility. It gives us access to new investors that have a mandate only to invest in Europe, a market where I've done my entire business career and many people follow us. We have a free float of almost 33%. You can see that we have outperformed the mineral and the metals and mining index of ASX, and we did it over the past 2 years. If we compare our share performance against our peers, we have done very well as well. So, in summary, operationally, we have done a good job. We have exceeded our goals. We still have many areas of improvement. We can extend our drilling program. We will start producing and selling rutile, the same for ilmenite. We will increase our volumes and have a huge opportunity of reducing our costs. Strategically, we're continuously looking for new opportunities and looking for potential acquisitions to become the consolidator in Central Kalimantan. So that would be the brief presentation of our company. And with that, I hand over to Mark.
Oliver, thank you indeed for the presentation. Ladies and gentlemen, do please continue to submit your questions using the Q&A tab situated in the right-hand corner of your screen. But just while Oliver takes a few moments to review those investor questions submitted already, I'd like to remind you that recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard and the Investor Meet Company platform. I'd also like to remind you that your feedback is important to the company, and immediately after the presentation has ended, you'll be redirected for the opportunity to provide your feedback in order the company can better understand your views and expectations. Oliver, we have had a number of pre-submitted questions, so perhaps we could start the Q&A off with these. One of them is, I guess, kind of a generalistic question, is why should I really invest in a pure play zircon producer like PYX?
Well, thank you for that question. There's two main reasons. The time is right, and the share price has a big upside potential. I mentioned before that timing is right. There is a lack of zircon supply. Prices are increasing, and I believe this price pressure will continue. And we're ideally positioned in a Belt and Road country. Pricing has a big upside potential. Research shows that we should be in the short term at 160 pounds per share to 184.
Fantastic, Oliver. Thank you. Next question we've got here is, I think you've covered some of this off really, but what are the demand projections for zircon? Where do analysts see the biggest future growth potential? Is it electronics, batteries, obviously very topical areas?
The demand is projected to continue to grow with a CAGR of 1.6%. And there's no projected catch-up of supply. And the main growth, we will continue to be in the traditional applications, like I mentioned, in the ceramics, the foundry, the pigmentation, the refractory applications. But the main growth that's growing at 20% and is projected to grow at 40% is in the high-tech applications.
Thank you. And another one here, you obviously had great growth performance of late. What are your growth protections going forward? What's sort of the vision for the next couple of years?
So as I mentioned, we're working on increasing our volumes and reducing our costs. In the next 5 years, we intend to grow up to 48,000 tons. And with that, and decrease our cost by $800 per tons. And by doing that, the resulting EBITDA margins with very conservative pricing, still at $1,400 per ton, are in the mid 60%. So we are projecting a strong growth.
Fantastic, thank you. Next question we've got here is, PYX recently announced it would be producing new byproducts. Are there any other product diversification plans on the horizon?
The only product diversification plans is the minerals available in our tenement. So today we're producing zircon. The byproducts are rutile leucoxene and ilmenite, and that's the only products we can produce. So the only other way of doing product diversification would be through acquisition of other mines, and we don't intend to do that today. Our plans is to focus in Central
Fantastic, thank you indeed. Next question we've got here is, do you plan to expand your operations beyond Indonesia?
Not at this moment in time. We have our hands full right now with the operational targets that we have set. We have several different mines that we're looking at in the area. I think it would be a mistake today to diversify too fast. So I don't exclude it in the middle long term, but at this moment in time, we should be focused with our actual operations and strategy.
Fantastic. And the final question we've got here, what role will zircon play really in the decarbonisation and electrification of the global economy?
I believe, Mark, I've mentioned it a couple of times during the presentation. Zircon is a critical mineral in our transition to clean energy. This is based on the important applications where zircon is utilized. Solar cells, catalysts, nuclear energy, batteries for electric vehicles, etc. So it is a very important mineral and very important within that process that there is a lack of supply, and we will focus on increasing our potential, our sales potential, and mainly because we have a high quality premium zircon that is ideal for these applications.
That's fantastic. All of that concludes the pre-submitted questions. We have had a number of questions submitted during the presentation as well. So if I may just ask you just to click on that Q&A tab, and where appropriate to do so, if you could read out the question and give your response, that would be fantastic.
Okay, so the first question I have here is, what is the current mine life and what's the strategy on M&A? How competitive is it to secure assets? Also, what, if anything, is holding you back from increasing capacity further? Okay, so that's three questions. Our mine life at 48,000 tons is 200 years. So it's a very large mine with 10.5 million tons of inferred resources. How competitive are we in M&A? I mean, the only example I can show is the one we recently did in February. We acquired Tisma 100% through issuing of shares, and it was perceived in the market with almost doubling of our share price. So that was a very good acquisition, and I hope we can continue like that going forward, especially since we're the only real industrial group in the mineral sands arena in Kalimantan. And what we have to do to accelerate the capacity, I mean, today with the funding we did last year and this year, we should have enough cash, and we have no debt to fund the growth of Mandiri and to grow organically. But today timing is perfect and could not be better to accelerate our plan. So right now I'm studying with the board ways of accelerating the program and potentially also producing on Tisma, and to have two producing projects. Do you own 100% of the assets? We control 100% of the assets. In Indonesia, foreign companies are not allowed to have ownership over the license, the mining license. So what we do is we have control over the mining license. We have a foreign-owned company in Indonesia that has an management and operations agreement with the local company that holds the license. This gives us, in return for the investments we do in the mining, gives us 95% of the pre-tax profits. We decide on the majority of the directors of the board, and all of the shareholders have pledged their shares to us. So we believe this is the strongest structure you can have in Indonesia to control a mine. Could you talk to us about the rarity of zircon? At the end, it's a minor metal. There are 1.2 million tons produced every year, but it is the element number 16 of appearance in the world. So at the end, it is a natural appearing element. It appears a lot, being number 16, but there's not enough for the needs that we have today. How stable is the business environment in Indonesia? I think very. I mean, over the last 10 years, you can see that Indonesia has focused on mining. They have done a lot of changes in order to bring foreign investments to the mining business. They changed the COW licenses to the IUP licenses, which are much clearer and more transparent in 2009. And there has been a stability, both, politically and economically, under the actual government. So it's growing as far as the 21st mining country in the world, with very large resources and stable. There are some horror stories for the past. Most of them are over 10 years old. Most of them are mostly not as a result of the Indonesian government, but businesses done based on trust with local partners that did not work out. So we're very happy. We know Indonesia and Kalimantan very well. We have been producing for the last 6 years. We have renewed our licenses. We're 100% licensed in both of the tenements and have all the environmental permits. So we locally and in the government in Jakarta, we know. I have on the advisory board an ex-managing director of the coal and mining department. So we're comfortable in Indonesia. Does zircon need additional processing after it's mined? Do you do this additional processing? Yes, it does, and we have to. As you know, Indonesia puts a lot of value demanding that we only export processed materials. So South Africa and Australia can process concentrate, which is usually at a grade of 40. We have to process with at least 65.5 grade, which is what we do in our mineral separation plant. We have a capacity of 24,000 tons, and we export 100% of our sales are premium zircon. And another question that just appeared, what is your dividend policy? I mean, now in the next 5 years, we will be investing the cash that's generated by the business in additional capacity. Obviously, once we have increased our demand and have reached cruising level, we will pay dividends, which we will look at when the moment is ripe.
Oliver, thank you so much. You've addressed every single question we've had through, so thank you very much indeed for your time today. And of course, any further questions that do come through, Oliver and the team will be able to review, and we'll publish responses where appropriate to do so on the Investor Meet Company platform. Oliver, if I may just ask you just for a few final closing comments just to conclude before we redirect investors to give you some feedback.
Thank you very much, Mark. Timing could not be better, as I mentioned before, for our project. In today's world, we have trade wars. There is a lack of supplies. Mines in the world have closed. So for our project, the time is ideal, and we have a huge opportunity of increasing shareholder value and increasing share prices with the project we have, both operationally and strategically. Operationally, as I mentioned, through increasing the volumes, reducing the cost, and start producing and selling the byproducts, which are rutile and ilmenite. but strategically also looking for other mines. So I think it's a wonderful opportunity for investors, now that we're also listed on the London Stock Exchange, to find a new share with a big upside potential.
Fantastic. Oliver, thank you indeed for updating investors today. Could I please ask investors not to close the session? You should be automatically redirected for the opportunity to provide your feedback in order the management can better understand your views and expectations. This will only take a few moments to complete and is greatly valued by the company. On behalf of the management team of PYX Resources Limited, we'd like to thank you for attending today's presentation. That concludes today's session. Thank you.
Thank you.